Tonight's webinar is designed purely to educate you on the National Rental Affordability Scheme, or NRAS as we'll refer to it throughout the night. We'll take an hour or so of your time to go through a presentation which you'll be able to see on your screen if you're in front of a computer. And you'll be able to ask some questions as well. You should be able to see where you can type in your questions as well. Before we begin, I'd just like to extend our thoughts to those of you who've been affected by the floods in Queensland and Victoria. Our thoughts have certainly been with you throughout this very difficult time. And the floods have had an impact on the National Rental Affordability Scheme, which we'll talk more about later on. But first, I'll introduce my two partners, Greg Clough and Paul Thewlis, who will be helping me with the presentation this evening. So welcome, Greg and Paul.
Thanks very much, Ruby, and welcome everyone. As just to confirm what Ruby's saying, our thoughts are with those who have been affected by the floods, and certainly tonight in northern Queensland, our hearts go out to those people waiting to get through what's going to be a pretty horrendous 24 hours for them. It has impacted on the National Rental Affordability Scheme, but that's minor in the scheme of things compared with what people have been through in the last few weeks in Victoria and in Queensland. So we've been thinking of you, and our thoughts go to you, as Ruby said. So the National Rental Affordability Scheme, what we like to do, Ruby, Paul and I, we just give you a little bit of an overview for a few minutes. It means we'll repeat some things as we go through the night, but we do want to get drill down as much as we can in the next hour so that you come away with a really clear understanding of what the NRAS is all about. There has been some misunderstandings out there in the past. We really want to clear them up for you. As Ruby said, we're about information and providing you the facts. There's also lots of reference sources you can go to. The FARCIA website will give you the details of that, and the ATO website. And of course there's our websites that we've got where you can go and check out the facts of NRAS. NRAS was a Labor Party platform. A think tank finalised their plans with that in mid-2008, and then it passed through Parliament in November of 2000 of that year. And the concept was to produce 50,000 new dwellings for affordable housing. Now, it's very important that right up front we try and differentiate the difference between affordable housing and social housing. Affordable housing is quite a really simple program. The legislation itself is, you can download off the government website, is only about 11 or 12 pages, so it's not complex. I think some organisations early days made it a bit too complex, but it's a very simple transaction between a landlord and a tenant, the property investor, yourself, and a tenant. You have some other parties in there. You'll hear about approved participants, and there's many of them, or several of them, around the country. They manage the scheme for the government. Now, Julia Gillard announced last week that because of the impact of the floods and the rebuilding of Queensland and Victoria, that some of the money from NRAS was going to be moved aside into that program. It means they reduced the program to 35,000 dwellings. You know, we've still got less than sort of 2,000 or 3,000 dwellings completed. So even at 35,000, there's still plenty of opportunity for people to get involved. But the licences are being issued, they're being taken up, and time is of the essence to start having a look at where you want to get involved. We've got properties all over the country. There's a number of different programs being run. We can explain them to you as well. So quite simply, we've now got 30,000 NRAS licences. They're managed by approved participants. Onyx is one of the companies that go to their investor client base and promote the scheme as a sales channel and as a licensed real estate agent, and in our case that allows us to look at properties all over the country. What the government have said in their legislation is that they ask the investor to reduce the rent by 20% in lieu of getting the NRAS grant. The NRAS grant in this year, this NRAS year, which ends April 30th, new year starts May 1, so the figure will be going up. Looking at rents nationally, they've gone up between 4% and 7% for the year. Currently, $9,140 for this year. The program runs for 10 years from the time you get a tenant. So in total, you're talking about 109, well, based on the figures we've indexed out over the 10 years, $109,228. How we reached that figure is we took the last 10 years rent CPI, how the NRAS is indexed. We took the average of the last 10 years and then we indexed that out for the next 10 at 3.9%. Interesting to note that the whole basket of CPIs has been running at an average of 2.9, and rent's been running about 1% above that. And certainly the last couple of years we've had increases of about 8 and 5%, and we're looking at probably another 5 or 6% this year. So the scheme keeps indexing. You need to have you need to reduce your rent by 20%, and the tenant needs to be means tested, and we'll get into that. So that's a bit of a snapshot. I think we can get into the show, and as Ruby said, there's some questions that we can answer or can be asked and answered at the end as well. So let's have a bit of a chat, and Paul and Ruby and I will share this tonight. We won't all be we'll be all talking with you and sharing this information. So we just want to make sure that you understand that this is not specific financial advice. You need to get your own advisors involved. This information is general in its content, and it's meant to provide as accurate as we can explain to you what NRAS is about. Then you need to seek further advice to get before you make an informed decision. We will attempt to, if we can't answer questions for you tonight, or if we don't cover something, we give you our promise that we'll go away and find out the answer for you, because we're still getting questions now and again that we can't answer. We won't pretend to know everything, but we've got a pretty good, we think we're fairly knowledgeable and experts at this now. But if there's a tricky question we can't answer, we'll go away and get the answer for you. So let's just run through what I've just covered off in that little snapshot at the start. The great thing about NRAS and the incentive is that it's tax-free. So it's part contributed by the federal government and part by the state government. I think a little area where the federal government could have been more consultative was actually talk to the states before they introduced this legislation. However, the federal government are contributing 75% of the fund, and the states are to contribute 25%. The federal government pay that as a tax offset, and the state government pay that as virtually a cheque. So you've got contributions coming from both governments. What it does, because it's tax-free, it turns, in every case we've looked at, a negative cash flow into a positive cash flow. So you still get all your normal tax deductions, but you get this tax offset or payment. As I said, the figure's $109,228 tax-free over 10 years. And we've worked that out by indexing under the formula provided by the government of rent CPI, and we took the average of the last 10 years and applied it to the next 10 at 3.9% being the rent CPI. So this year, 9,140 tax-free. If you index that out, you come up with $109,228. Clearly, they're powerful tax and financial benefits. Some of our investors are saying they haven't seen anything this powerful, and some of the more cynical ones, 1 in 100, say, where's the catch? You know, tell us where the catch is. There is no catch. This is a genuine program by the government, and by the time they apply all their formulas and things, in actual fact, they're probably going to get it back, part of it back in other ways from employment and having people in the workforce, etc. So you maintain all of your negative gearing benefits, and so it's a combination of tax offsets and tax deductions. So all your normal deductions on the property and the fixtures and fittings and interest and all of that is still covered, plus you get the offset of $9,140 this year. The other thing is the federal government have put the money on the table, and the federal government have been really proactive with this. They've approved a lot of licences. The states then are charged with the responsibility of approving the postcodes and the areas. That's not local government area, it is by postcode, what postcode that these properties need to be in. That means that we have almost the state government's imprimatur, that they have researched which areas they think are most needy for affordable housing. So it gives us a further assurance that there's been some further research done by government to actually improve our investment position. One thing I did forget to mention in the introduction, if I could, just to cover it off, is that originally the scheme took a little while to get up and running. The first year was really slow. That was because government were trying to get large institutions to deal with large developers and get them to build 1,000 houses together. Superannuation funds couldn't get their head around residential property, and they didn't want to be dealing with 1,000 tenants and 1,000 investors. And builders at that time, just coming out of the global financial crisis, didn't want to be building 1,000 houses for one institution. So the scheme faltered early days until they introduced a system for approved participants to what is called a non-entity joint venture. And this allowed individual investors who just want one property or even more, but one property to start with, could actually access the scheme through approved participants. And we'll cover that off further as well. And as I said, hopefully by the end of the hour you'll have a really good, clear understanding, and after the hour there'll be some questions. You'll have a terrific understanding of what NRAS is about. It's not that complex. We need to, dumb it down a bit and make it really simple, so all of Australia can understand the system. So we move on to cash flow comparison. I think if we've got Paul there.